Welcome to the FY21 annual results for Ramsdens. It's been another challenging year. You know, COVID has dominated the landscape again. If you think of the start of 21, we had a retail lockdown for the first 3 months, 4 months of the year. We had severe restrictions in international travel throughout the summer. They were actually worse than 2020. So it's been a challenging year in all those respects. Ramsdens has stayed open throughout the whole of the period, and I'm pleased to announce, some very good, resilient results. Ramsdens has got diversified income streams, so we have a spread of services that allows us to be resilient in these times, and that's what we have been again. So for the year, we've made a pre-tax profit of just over £500,000. Our net assets are 36 million. As a result of making the profit, we are recommending to the AGM that we're going to recommence our dividend strategy. So post-tax profit, 100% dividend, equates to 1.2p per share, recommended for the AGM in February and distributed in March post-approval. For our business, for the last 12 months, comparing it to a prior 18 months is difficult. You've got pre-pandemic, you've got post-pandemic. So what I want to do is give a flavour of where we are with our current trading in the first quarter of FY22, which is October to December, and how that compares to the prior year. So our branch retail sales are up 30%. Our online retail sales are up 70%. So retail is really going from strength to strength, and that's just the investments that we've made over the years in the stock, the presentation, the staff skills. It's all coming through. In terms of foreign currency, comparing the quarters, we're actually up almost 200%. But the caveat is we're still only about 40% of pre-pandemic levels. But you look forward, international travel will hopefully resume. People are looking forward and booking holidays for the summer. We're expecting our foreign currency to grow back. Moving on to pawnbroking. So our pawnbroking loan book has grown from 5.9 million last year to 6.8 million this year. We expected it to grow back as normality returned and people started to get into normal spending habits, that have short-term gaps in their cash flow, and we provide the pawnbroking loans for that. So it has grown back. We're expecting that to grow back further. So pawnbroking is doing what we expected it to do. Gold buying, whilst it's up about 50% on last year, it's still only about 80% of pre-pandemic levels. As we start to serve more foreign currency customers and we start to make them more aware of our gold buying service, then that service will come back. So all in all, we've had a good quarter and we're optimistic moving forward. As a business and as we move forward, we've got 5 strategies that we are concentrating on. So coming to them in turn, the first one is how do we improve our core estate? So internally, we talk about the foreign currency. We still want to have very competitive exchange rates, but we want to manage our margin. We want to improve the repeat customer rate. We want to grow our market share given all the flux that's happened in the market over the last 2 years. We think we can do that. We can grow foreign currency out of our existing estate. In our existing estate with the retail, the presentation of the stock system that sits behind it to have the replenishment and have the stock levels at the appropriate level, the skills of the staff, the presentation of the stock, all that has got, has been invested in, continuing to be invested in. We continue to try and raise the bar and move forward. So we're still working on that, even though we've had some very good results. Pawnbroking, it's appropriate lending for me. We lend responsibly to the customer, we look after the customer, we lend the right amount that they're affordable to repay. But if the customer doesn't repay, how can we sell that goods to maximise the income for the company and the customer? And also the gold that we buy, how can we maximise the return, whether that's for its intrinsic value or whether it's sold through retailing, helping the retail results. So there's lots of things there that we can do with our services, but the other things that we can do with our existing store estate and why we've got flexible leases or flexible lease arrangements is that when a break comes up, if the town has shifted, then we can relocate the store to where the footfall is. And obviously as we move stores, with the way rents are at the moment, we can get lower rents, we can get slightly bigger premises, we can have a better jewellery offering, we're in a higher footfall location for our foreign currency, and we can develop, if you like, our return of the profit from that store in that town by relocating. So that's something that we have done in the past, and we have 7 earmarked to happen in the next 12 months or so. The second strategy is to grow the core estate. So there's lots of opportunity to have more stores, both in the heartlands of the north and Scotland, the northwest now and Wales, but also in the southeast. We have now opened in the southeast. We've got our first store open in Chatham that's had a fantastic start. So well done to Deborah and to Stephen. And we want to build on that in the south and, like I say, infill in the north. So lots of opportunity for us to grow our core estate is our second growth strategy. The third strategy is grow online. It's a strategy we've had for a few years and it's starting to show dividends. Our online retail sales doubled in the last 12 months. Now part of that is COVID and people shopping more online, but it just shows that we're in a good position to take advantage of that. We've got great momentum, 70% up in the first quarter of this year, so we think we can continue that. There is continued investment in how the website looks, how it operates in the back end, so we can maximise the search engine optimization. We are having good success with our pay-per-click campaigns. We've just started doing affiliate schemes. So there's lots of things that are happening, if you like, in the website to grow itself as a single branch, if you like, for the retail side of it. But that website is also a catalogue. So the more stock that we can put on the website, the branch staff can see that, whether that's in Aberdeen or Haverfordwest, and they can sell, you know, an item that's online, and we'll ship it to the local branch for the customer or ship it direct to them if they prefer. So the online is absolutely on its own profitable and making progress, but it's also helping the wider core estate. As well as that online investment that we're putting in retail, this year we're reviewing the foreign currency website and how that operates for customers. You know, it's appropriate that we get that done this year as we think FX is coming back. So that's one of our objectives for this year is to review our foreign currency website. Our fourth growth strategy is really, you know, part of it is something will crop up. You know, the industry that we're in, jewellers, the foreign currency, a lot of flux over the last 2 years. That will present us with opportunities. We bought one loan book last year in Manchester from a business that's located primarily in London. I think now that we've moved into Chatham and the southeast, there are more pawnbrokers. So once I've got my nucleus of the Ramsdens stores, very happy to look at acquiring stores down there because we'll be able to take advantage of it if there's an opportunity. Our fifth strategy is to do with ESG, how we run the business, and obviously we want to do everything right. So starting with, you know, the E for environment and sustainability, you know, the things that we do, we take second-hand products, we recycle them and retail them again. So the business has sort of a sustainability theme within it. But what can we do? How can we reduce our energy usage? Right, so from an environmental perspective, we have to put the lights on. You know, we have the bricks and mortar, we have the stores, so it's how do we reduce our energy usage? So LEDs, travel less, all those things we have a programme of doing. We also have a programme of how we can recycle more, how can we reuse, how can we create less waste. And we have that through our Think Green initiative that all the staff participate in. All the branches now have recycling facilities within them. And that's an education process, how we as individuals be more environmentally aware. On to social. So for me, 3 aspects of social. We have, if you like, our customers, we have our communities, and then we have, if you like, our staff. Customers, absolutely responsible lender, we have to look after the customer. We've worked with our customers through COVID. We've helped customers out. We've, believe, done the right thing. Moving on to our communities, you know, we're a large organisation. We want to give back. So we have, you know, varying different charitable endeavours that are emotive to the staff, locally or nationally. We want to support that, and we've raised almost £17,000 for a variety of good causes during the last 12 months, and those initiatives continue on. So, you know, we want to do the right thing in our communities. And then amongst our staff, but we want to look after our staff from a wellbeing perspective. So we've got an employee assistance programme that's external experts look after. So if any staff member needs that extra support, it's there for them. We have put in pay rises ahead of inflation. pay is now well ahead of the national minimum wage. So we want to do the right things by the staff. So to check, if you like, the pulse and mood of the staff, we do a staff engagement survey. Over 85% of the staff completed the survey. It's all anonymous. And two big key findings: 90% of the staff think they work in a happy working environment. And that's great. And obviously we want that 90 to be 100, but that's a good result. And 84% really look forward to coming to work and enthusiastic about the job they do. And we can see that because you go into the stores and you go around the estate and you see the smiling faces amongst the staff, and you see the service that they give. So from a staff perspective, we seem to be doing a lot of things right, and obviously they're looking after the customers. And really, I mean, from my perspective, proud to lead Ramsdens, and grateful and thankful for all the hard work, all the dedication that my staff have shown. I just want to publicly thank them for that. So the G, governance. We are highly regulated. We're AIM listed, FCA authorised, HMRC authorised. So we have lots of rules that we have to follow, lots of policies that we have. I have a strong internal audit team. I have a strong compliance and risk team. We monitor the business all the time. We have the systems and controls. So I think we have good governance within the business, and we've shown strong compliance whenever we've had to send our reports into our regulators. In summary, despite all things that have happened through COVID and restrictions and the rest of it, the business is diversified, it is resilient, it's been agile. We've made over £500,000 profit, we're restarting our dividend, and we have growth opportunities. So I think the business is in a good place to take advantage of that and reward our stakeholders as we move forward over the years.